Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on Facebook, daily, weekly, shorter term time frame. So the bears are still showing some strength. We lost the 200-day moving average support, back tested and rejected from it. And then a red day today, continuing to close right at that middle Bollinger Band support of 119.06. It's an inside candlestick to be watching tomorrow. A break of 118.80 will be looking bearish. A break of 119.77 will be looking to regain that 200-day moving average. We can still see the lower high pattern ever since the dump started here. We do still have a higher low to be watching, and we're pretty much trading within those ranges. So we're going to have to see a break of 122, and actually that's a false high there. We didn't get that high that week. So I'm really still looking at 122.98 to break the lower high pattern. And the bulls need to hold. This support here is pretty key, 117.61. And if we break that level, we're looking down at 114 even. So the range continues to tighten. The weekly time frame, we can see that with the rejections from the exponential moving averages. The 50-week moving average support is potentially coming up again at 117.38 if we continue to see weakness. And we really need to see the bulls get over these exponential moving averages on the weekly to see any kind of follow through. Otherwise, we are just, in my opinion, stalling out before another leg to the downside. So a lot of other names are doing a lot better than Facebook on this bounce, even in the same tech sector. And we're not seeing that in Facebook. It is definitely a lead bear in the technology sector compared to Google and watching Apple trade. Facebook definitely weak. So we have a middle or an inside candlestick to be watching tomorrow. Also looking at the hourly time frame, yesterday we had the 20-period moving average resistance reject the price pre-market, then right at the open, and then another 4 times during the day. And look at today's action, a little bit of sick humor by the market gods where we finally get a close above that resistance and bulls are going to turn things around, and we just reject from the next resistance that's right there, and then we lose that support on the back test and then reject, and it's back to resistance again. So very little follow through, a lower high and a higher low. You can see the tightening range that we just saw on the daily time frame with a bit more detail here. And we have the channel between the 100-period resistance of 119.78 and the 200-period support is 118.64, and the low of yesterday bounced pretty much right above that level by about 10 cents or so, 11 cents. So you can also just be watching this channel along with the inside candlestick on the daily time frame with the range of today's trading, and we should get a nice indication tomorrow and a clear break from a tightening range. The momentum does favor the bears overall. Market bulls have been extremely strong, hitting new all-time highs, and the Facebook bulls aren't really seeing any of that benefit. So we'll check back in tomorrow and see which direction this inside candlestick breaks. I hope you have a great night. Thanks for watching.